In this video, I will backtest this secret buy-sell indicator strategy with 98.6% win rate created by my trading journey to see if it's really this good. I will backtest it 100 times with an initial account size set at $1,000 with 1 to 1.5 risk-reward ratio. The creator of this strategy says that it works perfectly well on a 5-minute time frame. He also mentioned that this strategy can be utilized on all markets including forex, stocks and crypto. So for my backtesting, I will use Kiwi dollar 5-minute time frame. Okay, now let's go ahead and add the indicators to the chart. For the first indicator, we will add Venki's scalping signals. This one by Venkatesh. And for the second indicator, we will use Williams percentage. This one by Sturma. Okay, now we need to adjust these indicators because the chart looks extremely busy. So let's first double click on this Venki's scalping signals. And in the style section, remove everything that is unnecessary. Okay, we're only going to leave entry exit arrows and the MA trend line. Now we need to make some minor adjustments to the Williams percentage. So let's remove these bands and the background. Okay, the strategy is complete. Let's get into the trading rules. Okay, the creator of the strategy was also using Heikin Ashi candlesticks, but since TradingView does not allow me to replay the chart in Heikin Ashi, I'm just going to be using the regular Japanese candlesticks. Okay, so the rules for entering a long trade are very simple. We're only going to be looking to buy if the price is closed above the line is colored in green, and it's pointing upwards. Also, we need to have a yellow arrow printed below the price. And finally, the yellow line of the Williams percentage has to be above the blue line. The creator of the strategy didn't mention anything about money management, so we're just going to be using the standard 1 to 1.5 risk-reward ratio. We're going to place a buy order at the close of our trigger candlestick. We will set our stop loss at the recent lowest price. And our take profit target, as I said, is going to be set at 1.5 times the risk. Exactly opposite is true for shorts, so we're only going to be looking to sell if the price is closed below this line, the line is colored in red, and it has a downward slope. We also need to have a new yellow arrow printed above the price, and the Williams percentage indicator has to be bearish, which means the blue line has to be above the yellow line. And once we have all these conditions met, we're going to go ahead and place a sell order at the close of this candlestick. We will set our stop loss at the recent swing high, and our take profit target will be set at 1.5 times the risk. I also want to give you a couple more examples where you wouldn't have entered the trade. So for example, we had a long signal right here, but this signal was not confirmed by the Williams indicator. We see the blue line is above the yellow line. Also, we had a short signal right here, but we couldn't have entered that position because the line was colored in gray and the price was closed above the line. We also had a long signal right here, but this signal was not valid because the line had a downward slope. So just by looking at this strategy, I can tell that it eliminates losses pretty well, but I still think there is a lot of room for improvement. So let's first do our backtesting and see how well this strategy performs in different market conditions, and then we will try to improve it by adding or removing some indicators. Okay, so I just finished the backtesting, and as we can see, the strategy is profitable. Our win rate is 46% and we increased our account size by 30.83%. Yet I still think there is a problem with the consistency of our growth. If we take a look at the equity curve, we see we had a massive drawdown of around 30%, which is not ideal. Also, the profit factor for the strategy is only 1.28, and we had 5 consecutive wins against 5 consecutive losses. So overall, I would say the strategy is not bad, it makes money, but I'd like to see that win rate a bit higher. So in the second part of this video, I'm going to be trying to improve this strategy. Okay, so the problem number 1, this strategy is really bad at eliminating losses when the market is moving sideways. So we definitely need to find a good filter that would prevent us from taking all these bad trades. The second problem is that this indicator right here almost doesn't eliminate any losses, so we're going to get rid of it right away. And the third problem is that this strategy is lacking a good trend confirmation indicator. So now let's try to fix these problems. We will need to add 2 indicators to our chart, and for the first indicator, let's pick Ichimoku Cloud. And for the second indicator, we will add a volatility oscillator. This one by Verifid. Okay, let's first adjust this Ichimoku Cloud. Also, let's make some minor adjustments to this volatility oscillator. Okay, the strategy is complete. Let's get into the trading rules. Okay, we're only going to be looking to sell if the price is sitting below the Ichimoku cloud and the cloud is colored in red. The price also has to close below the line and the line has to be colored in red as well. A yellow arrow has to be printed above the price and the volatility oscillator has to break below the lower band. And once we have all these conditions fulfilled, we're going to go ahead and place a sell order. We're going to set our stop loss at the recent swing high. And we will be targeting 1.5 times the risk. Exactly opposite is true for longs. We're only going to be looking to buy if the price is closed above the Ichimoku cloud and the cloud is green. The price has to also close above the line and the line has to be colored in green. And the volatility oscillator has to break above the upper band. We see all our conditions are met and this is going to be our trigger candlestick. We will set our stop loss at the recent swing low. The profit target will also stay the same. We see this strategy is doing a really good job at eliminating losses when the market is ranging. We see this bullish signal was not confirmed because the cloud was colored in red. This losing short trade was also eliminated because the price was sitting above the cloud. Also, I wouldn't say this first confirmation indicator is ideal in the first place. It issues a lot of signals and not even half of them are good. Okay, so let's actually do our backtesting and see if the strategy is any better. Alright traders, I just finished the backtesting and as we can see the results are really good. Our win rate is 61% and we increased our account size by 175.99%. The equity curve looks much more consistent, we don't have any serious drawdowns. The profit factor for the strategy is 2.35 and we had 7 consecutive wins against 4 consecutive losses. So even with an average confirmation indicator, we managed to achieve a really good results. Okay traders, I hope you enjoyed this video. Don't forget to smash the like button, it really helps with the channel. And also if you want to see more videos like this in the future, then feel free to subscribe to Trade IQ.